So,
Hello.
Jeff Nelson of Movement Mortgage, loan officer, fixer of all things.
Thank you so much. So kind.
I need to know from you, what do we do? How do we help borrowers who want to buy their first home and now all these student loans are about to hit their credit report again? What does this look like? How do they navigate it? What do we need to pay attention to for the next couple months?
That is a great question. It's created a lot of panic. It's changed a lot of profiles for a lot of people. The first thing is if you have started the process, definitely check in with your loan officer to see how that's going to impact your profile. For some people, it may not impact it. For some, though, they have like I have a client who contacted me. They had zero payments. They had about $75,000 in student loan debt. Um, when we look at that, we would have to take 1% of that total amount. So that turns into a $750 payment for that person. Now, there's different alternatives. I told that client, reach out to see if you can do an income-based repayment plan. If you do an income-based repayment plan, now we can use that figure instead of that 750. Certain programs will allow me to use half of that 750 to 375 for the payments. But remember, when we're looking at qualifying you, we're looking at your debt to income, and those take a major impact. 375, 750, those are still large numbers for that client. She started income-based repayment plan, and I told her, hey, anything below 375 is ideal. She got approved for 250. So that didn't move her pre-approval that much, but in that scenario it did help her. I have other clients who have more student loans. So it's definitely connecting with your student loan provider, get on an income-based repayment plan immediately.
And what happens? Thank you for that.
Yeah.
So that's if you weren't, if you were in, was it forbearance or deferment?
Yep.
So now they're saying that's canceled. So now you have to start making payments. So it's not an option of zero. It's like you're going to have a number.
Yeah.
What happens if you can't afford to pay that? Because I heard they're going to do wage garnishments. What does that mean? And what is the impact of that if you're trying to purchase a home, if now the government's saying they're going to garnish your wages?
So wage garnishment that is that's going to be added to your debt as well too. Similar to if you have a child support agreement for certain families that pulls exactly from their pay stubs, because the wage garnishment will be a line item on your pay stub that gets deducted. Similar to like your home insurance and your taxes, they'll say, hey, student loans. If we see that on your pay stubs, then we have to make the difference. We have to put that as your debt. So if they say, no, that doesn't work for us, they're going to get their money one way or another, and we still have to hit you for that debt. Because especially if you're looking for a FHA loan, or if you're a veteran, or if you're looking to do a USDA loan, those are federally backed loans. So you can't be in default with loans, of student loans, or any federal loan debt. That's why they look at your IRS. Did you pay the IRS? If you didn't pay the IRS, got to get you in a payment plan, because they won't give you the loan for FHA VAs or USDAs.
So wage garnishment is like a dagger to the heart, because
Yeah.
when that starts, it's a wrap.
Yeah.
Can you get it removed? Can you like, how does that work? Can you say, hey, no, now I get to do it. Can you stop garnishing my wages?
Yeah.
Like, how does it?
I
I don't want you to go in and take it out.
Yeah,
I
no.
send it to you.
I believe, because this is all new, right? So this is
Right.
happening in real time. I believe if you do find a payment that makes sense, or if you just say, hey, you know what, stop attacking my account, here's my checking account, take it out this way, you can look to do so that way.
Okay. So are income-based programs still available, or have those gone away?
I
Like,
still see,
I think I see it there, but
I
people.
still see it. I still see it. I logged into my own. My services are Nelnet, and they've been giving me alerts that, oh, please sign in for your income-based repayment plan if you haven't already. Like they are advocating and promoting and screaming to the mountains while they still can help you to do so. So I would immediately immediately. And I was able to, talk them down prior to like saying, hey, this is the number that they want to give me. I was like, I'm a business owner. It fluctuates. It looks great right now. It don't. But they gave me a payment that was favorable, and I've never looked back. And even before I could have done forbearance, I just kept paying it because
Mhm.
I'm glad.
Interest.
Yeah, yeah, the interest. But now you run into a scenario like this where if you're trying to apply, everyone and their mother is trying to apply now, they may get, back to behind, and then they might just say, "Hey, no, the government's not gonna allow us to do anymore." So we don't know. These
Don't know.
right. We really don't know. These are new times that we're facing. My advisement is immediately contact your servicer, get an income-based repayment plan, get your documents over to them, and hope this is a favorable payment for you.
Got it. Okay. So what happens if I have student loans, but I decide to go back to grad school? So now I'm in school, but I also want to purchase a home because I'm working full time, but I'm also in school. So I'm in, what's that, deferment?
Yeah,
How does that play into buying? Because technically I don't have any payments, but we know it's coming.
yeah. So you would have the ideal is for you to get a letter from your student loan provider saying that you're in deferment and that your payments are zero. If you just say, oh, I'm in deferment and you don't have a document to give to the bank, we have to do 0.5%. So back that original example, that's 75,000, because if you're deferment, the least amount that I can charge you for that would be 375. But if you get me the letter that states that, oh, you're in deferment over the next 2 years, then I can use a zero payment.
So, guys, if you are back in school, make sure you get the letter that explicitly says your payments are zero. So, if it just says you're in deferment, it doesn't count. It
Yeah.
needs to say your payments are zero.
Yep. So
Okay.
little hack, if you can, it might depend on how much your monthly payments are, and you want to develop more skills. Might be worth it to you to go back to a community college, take a class, all right, develop a new skills, and save yourself paying on the student loan payments.
And if your payments are zero
Yep.
and you have the letter, but you are still making payments, do you count that towards my debt because I'm still actively making or proactively making payments?
No,
Okay.
no, because you're just choosing to pay on the principal.
Okay.
Right? If you're on the credit cards, any other that if you have an installment loan or a personal loan, if this is what you're responsible for, but I see you make an extra $400 payment by choice, that's by choice.
Got
That's why we look at the minimum payments for those accounts.
Perfect. And now let's talk strategy. I have student loans and it sucks. It's a
Yep.
375. I have my credit card debt. I have my car payments. I have a personal loan. All these things are just killing me in terms of getting. It's not that you can't buy a home. Your pre-approval will just be really small because they're going to
Yeah.
take all of the debt into account.
Yeah.
So strategically, what do you advise your clients do if they have all of this debt and they're like, I want to buy a home, rent's too high. I can afford to pay rent and cover all of this debt, but I still want to buy a home. How do you advise them? What do you tell them to do?
I advise them to join Denisha's money saving program. But but in all reality, you have to take a full look into your personal financing. You have to jot everything down, and I do this with a lot of my clients and say, all right, this is the mortgage that I anticipate you're going to have. We estimate, add that to your regular debt. I mean, add everything that's being reported on your credit report, everything that you pay monthly, such as gas, utilities, groceries. Where can I save costs? And start actively working on those. Monitoring how you use your credit cards and those balances will be super important, because if you can shave off debt that way, that can help you. Those personal loans, then you're not spending as much money in other departments, you can now pay towards the principal, as we talked about, to knock that off sooner. Because when you have less than 10 payments on those personal loans, installment loans, we can omit those from your credit profile. So that can save you money that way. Right.
That
Uh,
was a gem. So
yeah.
if I have less than 10 payments on, let's say, my auto loan or a personal loan, you don't
Yep.
count. You don't count it.
Don't count it. Nope.
Okay. So if you are at 12 months, you should just hold off and wait till you get to that 10 before you start the application process.
Or we can be proactive. We see if it's within 12 months, and we know, hey, it takes you 30 days to close, so that's 1 month already accounted for, and it's going to probably take you 30 to 60 days to find a house. Some people find it sooner. I love those, but then some people take a little bit longer. It's a big decision, but you can get towards that. But start the process as soon so you can know.
Awesome. Okay. Continue.
Other strategies, definitely a lot of people um, combine and then divide, right? Come together because the rates are still high, and now your monthly payments, but your overall debt is higher. So find a partner, find someone that's mutual. If you have a sibling, if you have somebody, other cultures, they come together, they band together to buy. Right now, Boston has the co-pilot program now that is encouraging people to do so. Um, this is going to be the cheapest it's going to be to buy a home over the next few years and maybe moving forward. So I always am a big advocate buy now and then reap the benefits later on. That's what real estate is. It's just the strategy. So if you can get the home, work together, save your money, minimize your debt, look to do so, look to buy some multi-families before a single family, just to be strategic, because we don't know what's coming. And the more prepared we are in our financing, the more comfortable we can get ourselves to be to execute in this world, the better off we're going to be.
Thank you. I appreciate that. And yes, I think a lot of times we are so focused on the American dream of the white picket fence single family home, and that is difficult for a lot of people. So now it's not that you stop, aiming for the goal of home ownership. You just change how you get there. The journey is going to look different, but the destination is still the same.
Yeah.
So you might have to buy with two or three people, right? Or you might
Yeah.
have to buy the single family and you guys are living in it together because you're single. Like you each get a room, you make it work,
Yeah.
and you save up and then you buy the next house after. So it's being really strategic. But even to get there, guys, you have to focus on your debt, right? You have to make sure you're paying down your debt as much as possible because it does impact your credit score. It does impact your debt to income ratio. And obviously, the amount you're going to get pre-approved for when you want to purchase a home. We are in a very expensive time to buy a home. So, in order to combat that, you need to have very little debt,
Yeah.
so that you can accomplish the goal. Okay. Any last words, sir? Thank you so much. I just wanted folks to understand kind of what's going on with student loans, how to navigate it. I think the key point is to get on the phone with your student loan service provider and see if you can get on an income-based plan
Mhm.
sooner rather than later. I would make that a top priority, um, to get done within the next week or two. So, especially if you're trying to purchase a home this year, because those payments will affect you. But any last words from you?
No, I don't want people to panic. This is just another bump in the road. We talked about the journey itself, right? The GPS, you know how to get there, but there's always going to be some traffic. There's going to be some hurdles, going to be stuff that you have to navigate around. But then along stay the course to your journey and your goals. And their strategies. Like I said, these companies are still willing to help. Um, go. You don't know what you don't know, right? We don't know how bad it could be. We got to, take a look. So go speak to a professional, and then let's strategize. Maybe you're looking at this before. Now we can look at different options to still make your dream come true.
Awesome. Thank you. Thank you. Thank you. And yes, guys, do not freak out. It's just a bump in the road and we have to navigate. We got to move around it, right?
That's
That's all.
it. That's
Be
it.
nimble.
That's it.
Nimble.
Yeah.
Be financially fit, as they say. We got this.
That's,
Okay.
that's
So
it.
have a great day. Thank you, Jeffrey.
Yeah.
Thank
Yeah. Yeah. For
you.
sure. Talk to you guys soon.